Good evening. This is Ken Long from Tortoise Capital Management. It's the evening of 9 December 2009. We're taking a look at the market health check. And we can see we're in bull normal conditions. The blue box indicates we've been sideways for a long while. You can see that we have violated support levels at 110 in the last 2 days, although we did have a white candle today. You see volatility declining. ADX is a real problem for the strength of the market right now. It's under 15. ADX, you can see right now, is at 14.09. And the minus DI is greater than the plus DI. And so what we have essentially is a non-trending market with bears slightly in charge. Although we remain in this blue box trading range, which we've indicated with a support level at 108 and then just a little north of 107. If we get violations of the 50-day moving average at around 108, then there's really no support in sight till we get down to previous swing lows south of 104. So there's a potential 4 to 5% downside risk. Williams percent R for the market is closer to oversold than overbought, although with a reading at minus 55, we're just about at the midpoint with today's little bounce. MACD histogram is below the signal line and getting weaker, and that reinforces the insights that we get from ADX. So bull normal, but definitely weak, a listless market after almost 2.5 weeks of steady sideways movement. Today's positive gains, however, do posture us up for some nice 551W setups, and that is, again, it's positive on 5 weeks, it's negative on the 5-day rate of return, but we have 1 day of positive momentum, a white candle, and we're at below minus 50 on the Williams percent R. And you can see a bunch of ETFs that meet that criteria, and that essentially gives us a tradable swing to retest the swing high, and we'd be buying the second day of momentum on a universal entry. The ones I particularly like are in blue. That's basic materials, Latin America, the U.S. market SPY, and also GDX, the large gold miners. But you can see there is a broad array of ETFs that are in this particular positive pattern, such as Brazil, Canada, consumer staples, the Dow Jones 30, U.S. financials, the Asia less Japan, U.S. materials, and S&P metals. So there's a broad array of global indexes that are in this posture, which means that momentum tomorrow, at the first sign of momentum, I'm buying, and particularly the ones in blue are going to be my targets. On the daily summary, we're again bull normal. We're at 63 on the annual 10-day index and 45 on the on the annual index and 45 on that 10-day index. Williams percent R again just below that midpoint line. Nothing extraordinary from the gap stat. You can see the Max Payne candidates, old reliables, Caterpillar, McDonald's, and Travelers are highlighted in among the Dow 30, as you can see right there. Plus all of the commodities in the ETF 100. So you have oil, gold, oil services, and S&P energies. So all those are of very great interest to us. You see the pivot at 109.74 tomorrow. No signals firing in the mechanical systems. Volatility index is at 36. You can see the slope of the 30-day regression line has rolled upwards, and that's generally a positive, but it's still right at the average of the last 180 days, so nothing exceptional about this particular market. The pullback does posture it for potential short-term swings. Volatility, having peaked about 3 weeks ago, came back to quiet and now is creeping up into normal. It's a repeat of the ADX line. Again, you can see below the signal line that the minus DI is in charge. I especially like this lineup of 551W candidates, 3060 stealth candidates. I like Alcoa. So tomorrow, if we see strength in commodities and basic materials, Alcoa should really pop. So that's going to be right at the top of my short list of things to stock. And then finally, the Dow Tactical Report. You can see in yellow everything that is below 20 on the 10-day index. Travelers, McDonald's, Bank of America, DuPont, ExxonMobil, and Caterpillar, some usual suspects in there. And then if you want to look at the overachievers already, things like Verizon, I think it's Boeing, and Merck, some old reliables there. And again, you can see in green, tickers are the ones that were exceptionally strong today. Pfizer and Alcoa. I like Alcoa for that reason, the fact that we've got 1 day of momentum in it already, but it's a stealth candidate, and it should benefit from any material strength tomorrow. Among the ETFs, you can see that the ones that are postured well as max pain candidates are all the commodities, the precious metals, gold and silver, oil and natural gas from the energy sector, and again the S&P 500 material. XLB actually was one of the big gainers today, and so that may foreshadow some strength tomorrow. So that's a quick look at the market. Again, my trading plan is going to feature these four ETFs in blue, and I'm ready to buy them on the first sign of momentum, and also Alcoa, gold, and silver if they're moving as well. So thanks for your attention and good trading.